Swing trading and day trading in terms of risk management. So there are different strategies to use depending on the time frames that you guys are also using. If you're one that tends to switch from multiple time frames, so right now we're looking at Aussie USD on a 5-minute. If you're the type that switches over to a 15, 1 hour, because you want to look at the bigger picture, right? So when putting in a stop loss and understanding risk management with day trading and swing trading, it's slightly different. It's a slightly different approach. In the last lecture, I was explaining how it's important to maintain a 3% risk management rule. That's for day trading. That rule should definitely apply as well for swing trading. It's just you have to be a little bit more crafty with your work when it comes to swing trading, and you have to have a different level of discipline because swing trading, if you're the type that always looks at the computer and you're always looking at your positions, it's a roller coaster ride. So at sometimes you could be up quite a bit, and at other times you might be looking at your account and wondering or wishing that you closed the trade, and then holding on to it. So it's very easy for it to get on your emotional side. That's swing trading, and also like with stop losses and stuff like that, it's slightly different. Let's just take a look at Aussie USD on a daily, just to give you an example of what I mean here. So when Aussie came up and was rejected at around the 0.80 handle, so right around this level here, there was a strong rejection, and we can see that strong rejection with these wicks in these candles. So price action rose to these highs, was unable to hold on to those gains, and was completely rejected. Okay, so now thinking that this is a good level of rejection, if we are able to come back and test these levels again, this might be a good opportunity to go short, and it was a good opportunity to go short. Okay, it's just it all depends on where you put your stop loss. And this is with swing trading, day trading, guys. Okay. So if you were waiting patiently for this level to be tested, let's just say around the 80.30 or 80.32, so slightly lower than these highs here. So if you got in a little bit too early because you didn't exactly have the full patience to wait for this price to be tested, you got in a little too early, and then you put in your 30 pip risk, right? That would have been right about there. You would have been stopped out, and then the pair fell down. So when it comes to day trading, your risk needs to be a little bit more. Okay, sorry, when it comes to swing trading, your risk needs to be a little bit more. So if you're holding on to positions longer than a day, okay, swing trading can last anywhere up to a few weeks. That's typical swing trading. So you want to have a bigger risk allowance for your trades when looking at larger time frames. I would personally give it around 60 pips is probably your risk allowance that you would want to implement. So in that case, you wouldn't have been stopped out when going at shorting this particular pair here. Okay, so day trading or intraday trading, 30 pip risk seems to be acceptable, and it seems to be working as long as you have enough patience. And then with with swing trading, you want to have a little bit more risk for each trade that you make. Because in the last lecture, I showed you guys a little bit about risk management, and I was explaining how this trade here with Aussie USD, it might have been a little bit premature, and getting in where we did might have been too early, exposing a little bit too much risk. And I made the suggestion of having more discipline, waiting for a better price. Like for example, if it fell down to this declining level of support, like for example, if it fell down like this, and then we are expecting a bounce, this would be a good area to execute a buy position. Now, when it comes to patience and discipline. You know, it's sometimes it can be difficult. I'm going to be honest with you guys. I personally don't like sitting in front of the computer all day long watching these charts. So sometimes it's a good idea to put in price alerts. So if the price falls down to a certain price point, we will be alerted. Okay, and you can do that with MT4 or MT5. In the bottom terminal, if you just click on the alerts tab and just right click, and you can create new, and here I'll just go ahead and put in Aussie US. Okay, and so if the bid is less than, let's say if the bid is less than 0.7811, let's say that, so 0.7811, okay, that's the noise that we will hear. Okay, now if the bid is greater than 0.78, we will also be alerted. So I'm just going to go ahead and hit OK, so then you guys can hear the noise. So there it went, because you see the price is greater than 0.7811, and you can actually click and drag on the price alert on the screen there. I'm just going to go ahead and modify this for a second, and I'm just going to go ahead and put that. So if it's less than, and I'll hit OK, so then that way we're not getting alerted all the time here. So now I can go ahead and I can leave my computer, I can watch TV, I can go about doing my daily things, and once I hear that noise, then that means, you know, we are now entering into the territory where we might be considering executing a buy position. Okay, so that's basically what I wanted to explain about the importance of price alerts. It really helps you guys to you know, maintain a good level of patience. So yeah, there's a lot more to it, guys. I'm just basically explaining all the basic stuff. You know, just because price does fall down to this level and you are alerted doesn't necessarily mean that you should be buying it. There's a lot more that goes into trading. For example, you know, if we're starting to get a lot of momentum that's picking up towards the downside, we're starting to see a lot more aggressive bearish candles. If it does hit this level and test this level of support, I personally would not be interested in buying it, only because, you know, once momentum starts picking up, chances are this level of support might break. Okay, you know, and so support and resistance does tend to hold up, but there are times when it does tend to break, and we need to be aware of that. So, you know, it all really depends on price action and how price action is moving towards this level of support. You know, as we're getting alerted, if price action looks good, you know, it doesn't look like there's much strong bearish momentum, and it looks like there is strong possibilities of us getting a bounce, we might see, you know, we're always looking for lots of confirmations, but if we are seeing lots of possibilities of a bounce here, okay, then that's when I want to get in and make my trade and then put in my 30 pip risk. Okay, that's it for this video. Thanks for watching, guys, and be sure to tune into the next video. Thank you.